All right, let's dive into one of the toughest journeys anyone can take, the path from being a new emotional trader to a seasoned, disciplined one. We're going to follow the story of new trader and his mentor, rich trader, to really unpack the hard-won lessons of the market. And look, this isn't just about charts and technical analysis. It's about mastering the single most unpredictable, most important variable in the entire game, yourself. So let's get into it.
So here's the roadmap for our story today, broken down into 6 acts. We're going to start with that dream, the allure of easy money that gets everybody hooked. Then, boom, we hit the psychological shock of trading with real fear. From there, it's all about the transformation, going from pure impulse to having a rock-solid plan, learning to manage risk like your life depends on it, and figuring out the incredibly difficult art of when to get out. And finally, we'll see the ultimate shift, becoming a lifelong student of the markets. This is the blueprint, folks. This is the path from amateur to pro.
So let's kick things off. Meet new trader. Picture this. He's waking up and he's got that buzz, you know? He's saved up his money from endless overtime shifts and delivering pizzas on weekends. He truly believes that part of his life is over. He's ready to take on the market with his shiny new trading account. His dream is massive, but his assumptions? Well, they're about to get a serious reality check. He's not seeing a complex battlefield of professionals. He's seeing a get-rich-quick machine.
Okay, this right here, this slide gets to the absolute heart of the entire struggle. On the left, you've got the new trader. He's running on pure greed, impatience, and a whole lot of ego. Greed is whispering in his ear, "You deserve this, big profits, and now!" Impatience makes him jump into trades for no good reason, just to feel the action. And his ego, all puffed up from some lucky wins in a simulator, has him convinced he's the smartest guy in the room. But on the right, you've got the rich trader. He operates with realism, patience, and just unshakable discipline. Realism means he knows losses are just part of the business. Patience means he can wait, sometimes for days, for that perfect setup. And discipline, well, discipline is the muscle that lets him follow his plan even when his guts are screaming at him to do the exact opposite. This is the battle right between your ears, and it's the one you have to win.
This is the stake, $10,000. And this isn't just monopoly money. This is hard-earned cash. Now, new trader's been practicing in a simulated account for over a year. And in that world, when you lose, you just hit the reset button. No big deal. When you win, that ego gets a nice little boost. It tricks you into thinking you're going to crush the real market. So his plan? It's simple, almost beautiful in his mind. Double this 10 grand in a few months, then do it again and again. He's picturing ending the year with $40,000, maybe $50,000. But what he doesn't get is that the simulator has no teeth. It can't make your palms sweat. It can't make your heart pound out of your chest. This $10,000 though? Oh yeah, it can. So looking for a little validation, new trader lays out his grand vision for his mentor. And rich trader's response is just this perfect, gentle dose of reality. He's not knocking the ambition, he's questioning the timeline. See, he understands that new trader is confusing confidence with actual competence. What new trader sees as a simple math problem, rich trader knows is a psychological war. It's a war against some of the smartest, best-funded people on the planet, and even more important, it's a war against the fatal flaws in your own human nature. The market has this uncanny ability to find your weakest emotional trigger and just push that button over and over and over again. This chart just lays bare the massive gap between fantasy and reality. Rich Trader breaks it down for him. A solid professional, someone who pays their mortgage with this, might make 10 to 25% a year. In a really fantastic year when the whole market is just screaming upwards, maybe they hit 50%. But new traders' goal of over 200%? That's not trading, that's trying to hit the lottery. It means a total beginner has to not only find a needle in a haystack stock, but also have a flawless, battle-hardened system to trade it without making a single emotional mistake. The odds are just astronomically against it, and chasing those kinds of returns is the fastest way I know to absolutely blow up your account. Rich Trader then drops this truth bomb on him. He says there's a very high probability you're going to lose money this year. But then he offers this key mindset shift. Don't frame it as failure. Frame it as tuition. Look, trading is a profession. A surgeon doesn't just read a book and start operating, they spend years in medical school. Your first year's losses, that's your tuition payment to the school of the market. It's the price you pay to learn how to manage fear, how to actually stick to a plan, and how to handle the gut-wrenching pain of being wrong. If you see it as a personal failure, you're going to quit. But if you see it as the cost of a world-class education, you just might survive long enough to graduate. And that brings us to Act 2. All the theory is over. New trader, even after all the advice, is still riding a wave of adrenaline. He's about to place his very first trade with real money. And he's about to learn the profound difference between practicing in a flight simulator and trying to fly a real plane through a Category 5 hurricane. The fear is about to get very, very real.
So he's been watching this stock SRSRS all morning. It's glowing bright green on his screen, like a beacon of hope while everything else is red. He sees the price dip to his target level, 925, and that's when the adrenaline just floods his system. His heart is pounding. His finger is just hovering over that mouse button, and every instinct, all honed in the totally consequence-free world of paper trading, is just screaming, go! He's not thinking about his plan anymore. He's just feeling this overwhelming, primal urge for action.
Instead of dipping a toe in, he goes all in. 1,000 shares. The logic is simple and greedy. He's got $10,000, and he's focused on a $2,600 profit. He's not even thinking about what he could lose, only what he could gain. He clicks the mouse. The order fills. But wait, not at the price he wanted. He gets in at $9.35, a 10-cent slip. This is his very first lesson in something called slippage, the friction of the real world. It's a small thing, but it's the first clue that the real market doesn't follow the perfect, clean rules of the simulator.
And then comes the gut punch. He looks at the real-time price, and just seconds later, it's at $9.10. In the blink of an eye, he's down $250. And this quote, this is everything. All of a sudden, those numbers on the screen aren't just points in a video game. They are now directly connected to his blood, his sweat, his tears, to the smell of greasy cardboard and the bone-deep exhaustion of a whole weekend delivering pizzas. The fear is real, it's visceral, and it's completely paralyzing. His mind just goes blank. The plan, the strategy, it's all gone, just replaced by this single, cold dread. This is the chasm that he just fell into. See, paper trading has zero emotional baggage. You can blow up an account and just hit reset. It feeds your ego, making you feel like a genius when you're on a hot streak. But real trading, that's direct hand-to-hand combat with your own deepest fears and desires. The financial pain is real, and let me tell you, it doesn't test your strategy nearly as much as it tests your discipline, your character, and your ability to stay rational when you're under incredible pressure. It will find your breaking point. Panicked, new trader calls his mentor and just blurts out, "How do you control your stress?" And rich trader immediately knows what's wrong. He explains that trading stress, that feeling of panic, it almost always boils down to these four things. Number one, and this is the big one, your position size is way too large for your emotional comfort zone. 2, you don't really have faith in your system because you haven't truly tested it. 3, your plan has too many holes, too many unknowns. And 4, your ego, your very sense of self-worth, is tangled up in the outcome of this one trade. You're not just losing money, you feel like you are a loser. The cure is actually pretty simple, but it's incredibly powerful. Trade smaller. Rich Trader tells him that the stress is a signal. It's your body's alarm system telling you that the stakes are too high for where you're at right now. The goal isn't to become a robot with no emotions. It's to lower the emotional volume so it doesn't drown out your rational brain. He tells him to cut his position size down, and then cut it down again, until he finds that sweet spot, the level where he can see a trade go against him and think, okay, that stings a little, but it's all part of my plan, instead of, oh my God, my life is over. This is what we call finding your sleep-at-night position size, and it is the absolute key to emotional control and long-term survival. This is a major turning point. New trader gets it. His mentor is right. He sells half of his position to cut his risk, and immediately this wave of relief just washes over him. He can breathe again. He can think again. And now the rebuilding begins. He finally understands that success isn't about frantically clicking buttons. It's about preparation and a calm, cool process. He has to stop being a gambler and start acting like a business owner. But old habits die hard. With half his cash on the sidelines, he feels this intense itch to get it back into the market. This is the fear of missing out, FOMO, in its purest form. He glances at his watch list, sees some other stock making a move, and on a total impulse, he buys 1,000 shares. No plan, no setup, no idea when he'll get in or out. He just needs action. He needs to be in the game. This is overtrading. It's a trade born from boredom, not opportunity. And sure enough, he sells it minutes later for a small loss after commissions. A little paper-cut loss that, over time, can bleed an account dry. Feeling like an idiot, he calls his mentor again. And Rich Trader delivers this piece of absolute counterintuitive gold. New traders, they want excitement. They're looking for that casino thrill. But professional traders, they're looking for profit. And the actual process of generating consistent profit is often methodical, repetitive, and yeah, let's be honest, kind of boring.
It's like running any other business. It's not about one big, exciting score. It's about the disciplined execution of a plan over and over and over. Your system is what makes you money. Your opinions, your ego, your need for a thrill, that's what loses it.
So new trader finally gets serious. He steps away from the flashing screens, gets out a notebook, and starts treating this like a real business. He writes a business plan by answering these essential questions. What is my exact, non-negotiable signal to buy? It has to be black and white, no gray areas. What's my signal to sell and take a profit? And most importantly, at what exact point do I sell to cut my loss, my stop loss? How much capital am I risking on any one trade? What specific stocks am I allowed to trade? And which ones do I stay away from? And finally, how am I going to backtest this whole thing on historical data to prove it even has a chance of working? This document, created when you're calm and rational, becomes your shield against your emotional self when the market is open.
This brings us to what might be the single most important concept in all of trading: mastering risk. This is the great filter. It's what separates the traders who last for decades from the ones who blow up their accounts in just a few months. Your entire focus has to shift from how much can I win to how much am I willing to lose. Defense, my friends, not offense, is how you win this game.
And this slide just nails that shift perfectly. The new trader who acts like a gambler is obsessed with making huge profits. Their first question is always, how much money can I make on this? But the rich trader who acts like a business person has one and only one top priority: managing risk. Their first question is, what's the absolute most I can lose on this trade if everything goes completely wrong? Their first job isn't to make money, it's to protect the money they already have, because that capital is the tool that lets them stay in business to trade another day.
And here is exactly why that priority is so critical. The math of losing money is just brutal. It's unforgiving. If your $10,000 account takes a 50% hit, you're down to $5,000. Now, to get back to where you started, just to get back to break even, you don't need a 50% gain. You need a 100% gain on your remaining capital. You have to double your money just to get back to zero. That's twice as hard to do. A single huge loss can put you in a hole so deep it becomes almost mathematically impossible to climb out. This is why the pros are absolutely obsessed with avoiding the big one. It's not about being scared. It's about respecting the math of survival.
And risk isn't just one simple thing. Rich Trader breaks it down. You've got trade risk, the basic risk that your stock just goes the wrong way. You've got market risk, where a market crash drags your perfectly good stock down with it. There's volatility risk, where a sudden crazy price swing hits your stop loss right before the stock turns around. There's overnight risk. Bad news drops after hours and the stock opens down 20%. You've got liquidity risk, where you try to sell but there are no buyers. Technology risk, your internet dies. And of course, the biggest risk of them all: human error. You. A professional has a plan for all of these.
So how do you actually manage all these different types of risk? Well, it starts with this simple but incredibly powerful rule. Rich traders' advice is to never risk more than 1% of your total trading capital on any single idea. So if you have a $10,000 account, your maximum acceptable loss on one trade is $100. That's it. This is a total psychological game changer. It takes each trade from being this massive, high-stakes, life-or-death event and turns it into just one data point in a series of the next 100 trades. It takes the emotional weight off your shoulders, it lets you survive a long losing streak, and it allows you to operate your system based on long-term probabilities instead of short-term fear.
The next massive skill to learn is the art of the exit. Beginners, they obsess over when to buy. But the professionals, they know that the money is either made or lost when you sell. A paper profit means absolutely nothing. It's an illusion that can vanish in a heartbeat. The only thing that actually matters is the realized profit that you lock in and put back in your account. This is the art of selling, and honestly, it's often way harder than buying because it forces you to confront your own greed and ego head-on. And new trader is about to learn this lesson the hard way with his remaining shares of SSRS. For a whole month, everything's amazing. He's sitting on a paper profit of over $600. His pride is just swelling. He feels like a certified genius. Then, one morning, disaster. Bad news hits. Before the market even opens, all his profits are vaporized. He's now slightly in the red. His trading plan, the one he wrote down, is crystal clear. Sell immediately if the price breaks a certain level. But when the market opens and just plummets through that level, denial kicks in. He freezes. Then he starts hoping for a bounce. But hope is not a strategy. He just sits there, watching it fall further and further until the emotional pain is just unbearable, and he finally capitulates, selling for a big loss and turning what was a brilliant trade into a devastating lesson about discipline.
This is that internal battle in its rawest form. When a trade goes south, your ego desperately wants to be proven right. It tells you, just hold on, be patient, the market's just wrong for a minute. Your ego hates taking a loss because it feels like a personal failure. But your trading plan, that document you wrote when you were calm and objective, is screaming at you to follow the rules and sell to protect your capital. The person who wins in the market is the one who can consistently tell their ego to shut up and just obey the plan. Rich Trader shares his own handwritten rules, the ones he's developed over 30 years in the trenches. These aren't just tips, this is a mantra for survival. And look at the themes here. He reads his plan every single morning before the market opens to remind his emotional brain who's in charge. He never lets hope get in the way of his stop loss. He believes his personal opinion of what a stock should do is totally worthless. Only what the price is actually doing matters. And this one is huge. He defines a successful trade not by whether it made money, but by whether he followed his plan perfectly. This separates the process, which he can control, from the random outcome of any one trade, which he can't. And now we come to the final act. New Trader has been thoroughly humbled. He's felt the greed, the fear, the ego, and the sharp pain of undisciplined losses. He now understands that he hasn't figured it all out, and the truth is, nobody ever really does. The market is a living, breathing, constantly evolving thing. The final transformation, the real leap, is accepting that trading isn't a finish line you cross. It's a continuous, lifelong journey of learning, adapting, and improving yourself. Rich Trader really drives this point home. He asks New Trader how many books on trading he's read. New Trader says, proudly, 10. Rich Trader just smiles and says the best traders he knows have read hundreds. Their offices look like libraries dedicated to market history, strategy, and psychology. This quote from the legendary investor Charlie Munger just says it all. You can't achieve mastery in any complex field without a relentless burning desire to learn. There are no shortcuts. And the moment you think you know it all is the exact moment the market is about to teach you its most expensive lesson. So what does it actually look like to be a student of the market? Well, it's not just passively reading. It's active, dedicated study. It's spending your weekends poring over historical charts, training your eye to recognize your setups instantly. It's keeping a detailed journal, not just of your buys and sells, but of your thoughts and feelings. Why did you take that trade? Were you bored? Afraid? Greedy? This is how you find your own psychological weaknesses. It's rigorously backtesting your system over years of data to build unshakable statistical confidence that you have a real edge. And it's finding a mentor or a trading buddy who can look over your trades and keep you honest. Someone who can spot the emotional mistakes that you're totally blind to. This slide really brings the entire mental shift together. The New Trader runs on opinions. I think, I feel, they're trying to predict the future, and their ego needs them to be right. But the Rich Trader completely abandons prediction and operates on probabilities. They don't have opinions. They have a system with a proven statistical edge. They say things like, my system gave a buy signal, so I'm in. There's no ego in that. No, I think. Their goal isn't to be right on this one trade. Their goal is to be profitable over the next 100 trades by just letting their statistical edge play out. They operate like a casino. They know they'll lose some hands, but they also know that over the long run, the house always wins. And as New Trader gets deeper into developing his own system, Rich Trader hits him with this really profound question. See, it's not enough to just find a profitable system in some book. That system has to fit you, your personality, your risk tolerance, your whole temperament. A super fast-paced day trading system is just going to burn out a naturally patient person, and a slow, long-term trend-following system will drive an action junkie absolutely insane with boredom. The goal isn't just to find a system, it's to find your system, one that feels so right, so natural, that you can execute it with total faith and discipline, even when it's going through an inevitable losing streak. So in the end, the journey from New Trader to Rich Trader, it isn't about finding some secret indicator or a magic formula. It is a journey of psychological mastery. It starts with the humility to accept reality and your own limitations. From there, it's about learning the practical skills to manage the intense stress of risk, mostly by controlling your position size. It demands the professionalism to build a real business plan and the wisdom to make risk management your absolute #1 priority. From there, it's all about the relentless, day-in and day-out discipline to execute that plan without fail. And finally, it's about committing to being a curious, humble student of the market for the rest of your life. That is the path. And it's a path built on character, not just on capital.